Hi, this is Nashima, the CEO of InfoTechSquad.com and Glam-led professor. I encourage every professionals and students who are planning to participate for EA and CPA exam, sign up with Glam. I'm using Glam for years and years and I'm quite satisfied with their quality and their services. Our today's topic is about what steps do you need to take to calculate and report net operating losses. Basically, when we calculate net operating losses, we have to add back and subtract some items, which we are going to cover in this topic. The net operating loss can be deductible if it is carried forward to a year with taxable income. The treatment of NOL, or which stands for net operating loss, for the year is determined by the year it was initially created, such as the year when the loss was made. The net operating loss can be deducted if it is transferred to a year with income that is taxed. Use the following method to subtract net operating losses. As I just mentioned earlier, we have to see what item do we have to subtract and what item we have to add. So here we are going to learn now what item do we have to subtract in order to reach out on the net operating losses. Number one, there is no carryback allowed for net operating losses that are generally in taxable year that starts in 2021 or later. The period for carrying forward is never ending. The carryover can only be used for 80% of the taxable income for the year it is carried over. Until it is exhausted, any excess will still be carried over to future years. Number two, the carryback period for tax year 2018, 19, 20 is limited to 5 years, and the carry forward period is unlimited until it is exhausted. The taxpayer can offset all their taxable income until 2021 with the carryback or carry forward period. From 2021 onward, the carryover is limited to 80% of the taxpayer's taxable income for the next year. Number three, the carryback period is limited to 2 years and the carry forward period can only last 20 years for tax year before 2018. After that is only carry forward unlimited. The use of NOL or net operating loss is not restricted to taxable income. Until the NOL is exhausted or expires after 20 years, any excess will be carried forward to future years. The net operating loss for the year can only be carried back or forward by the taxpayer by first bringing the entire net operating loss to earliest year. If the net operating loss is not paid off, the taxpayer has the choice to carry it forward to next year starting with an early start, and so on. During the carryback or carry forward period, the net operating loss can be used to offset the entire taxable income of the taxpayer. Now we are going to talk about how to calculate net operating loss. To compute the current year's net operating loss, begin with taxable income which may be negative and make the following adjustments. Number one, the addition of net operating losses carried forward into the current tax year is done. In other words, when determining the net operating loss for the current year, don't take into account net operating losses from other years. To meet timekeeping requirement, it is necessary to track separate net operating losses by year. Number two, the qualified business income deduction must be re-added. Now we will talk about the non-business deduction. What are the non-business deductions? It includes alimony, contribution to self-employed retirement plans, investment, property losses, and either the standard deduction or most itemized deduction are all examples of non-business deductions. Now we are talking about business deduction. We just learned about non-business deductions. Now we are talking about the business deduction, which includes personal casualty losses, employee business expenses, and rental property losses are all part of business deduction. Military, relocation, expenses are categorized as a business expense. Now we are talking about non-business income. So firstly we started with non-business deduction, then business deduction, now non-business income, which includes interest, dividend, gain on the sale of investment property, and treasure trove are all type of non-business income. Now business income, our non-business income, now we are talking about the business income. Rent and wages are business income. So in this topic we have covered the first topic was what steps do you need to take to calculate and report net operating losses. Then we learned what item do we have to subtract in order to reach out the operating losses. Then we learn about how to calculate the net operating losses. Then non-business, we talk for non-business deductions, business deductions, non-business income, and business income. If you still need any assistance to understand this topic, you can contact us. And bye now. I thank you for staying with me.